Welcome to episode 4 of the 5-Minute Investor, where Stockhouse columnists Jonathon Brown and me, Trevor Abes, each deliver a 2.5-minute stock pick related to a recent news story with investment implication. John, what kind of investing insights do you have in store for listeners today?
Well, Trevor, today's stock of choice is actually a bit of a last-minute pivot. I was going to go for GameStop. They've been in the news a lot lately, and I thought they might have one last rally in store before their inevitable demise to talk about. But just this morning, they torpedoed all that glimmer of hope. The stock dropped like 25%. They got some plan to buy like $1 billion in Bitcoin or something. They're going to close some stores in Canada because their CEO says we're too woke up here. He's also Canadian, so thanks for that loyalty. But anyway, enough about them. I took that on. I keep it in the family, keep that focus, still doing on games. And that's when I'm going to talk about someone that's actually doing well. And that is the Global X Video Games and Esports ETF that trades on the NASDAQ under the ticker HERO. It's around $26 American or 37 Canadian. Up 26% since this time last year. Like the name says, they're involved in video games, game sales, esports. But the stocks inside that is what's the real treat here. So here's a breakdown of some of them they got. They have holdings in Electronic Arts. I know they got a bit of a bad rap, but their stock is up 10% since last year, and they got some big releases coming out later this year. That's going to help them out. Take-Two Interactive, that's up 40%. They just had Civilization 7 come out. I know that sold really well, despite the rocky reviews. Grand Theft Auto 6, we all know what that is. Maybe coming out later this year, maybe this fall. When it does come out, it's going to be huge. The analysts, the YouTubers, they're all saying it's going to be the biggest entertainment release of all time. Not as big as video game of all time, but biggest entertainment release. If you got Take-Two stock before that hits, you'll be laughing. So of the 42 holdings it has in store, the 3 biggest is mobile tech firm AppLovin. It's up 314% since this time last year. Chinese online gaming publisher NetEase. It's down 1% since last year, but it's up 3.5% in the last 3 months. And also the International Game System. That's a Taiwan-based online game provider, up 44% since last March. So, in conclusion, Global X Video Games and Esports ETF, NASDAQ HERO. Need a hero? Here's one for you.
A lot of prospective names to consider there, John. In my case, my story this week is on U.S. President Donald Trump's executive order to expedite critical mineral development in the United States, including but not limited to uranium, copper, potash, and gold. The order aims to reduce reliance on international partners and maximize value from the U.S.'s vast resources through streamlined permitting, leasing, and funding. While the Trump administration will be identifying strategic projects applicable under the order over the next month or so, it may pay to get ahead of this wave of positive sentiment and identify projects likely to benefit because they're high quality and in-demand commodities, even if the administration does not identify them as strategic. An enticing stock to consider is Graphite 1, ticker GPH on the TSX Venture Exchange, market capitalization $140 million, which is developing its eponymous pre-feasibility stage deposit in Alaska, one of the largest in the U.S., to supply the lithium-ion battery market at a rate of 53,000 tons per year of graphite concentrate over an estimated 23-year mine life. For context here, the energy transition will require 4.5 million metric tons of graphite by 2050, according to World Bank data. The Graphite 1 project boasts a pre-tax net present value of $2.6 billion and a non-binding contract with Lucid Motors to purchase its first 5,000 tons per year of initial production. Later this year, management is planning a feasibility study, which is expected to more than triple output to 175,000 tons per year of graphite concentrate, with mine construction slated for 2027. With globally relevant production expected over the medium term and graphite demand showing long-term strength, it's no surprise that investors have caught on to Graphite 1's strong case for high conviction. rewarding shareholders with an over 470% return since 2020 that feels like it has plenty of room to run. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. Thanks for listening, and we'll catch you next time. The material provided in this podcast is for information only and should not be treated as investment advice. For full disclaimer information, please visit themarketonline.ca/disclaimer.